come up with the
I'll look for your
ideas,
email tomorrow.
I know.
And we'll
Yeah, I remember looking at this lady too and going, there's something about this lady I just don't trust.
You can feel it, yeah.
Sounds
You
like
feel it. What do you remember her name? I can't remember what she was.
Honestly, I can't remember. I really can't. She looks like a witch, though. I remember that.
Okay.
Well,
Is that
I
right?
okay. So does Mike Sankey still do this? Still do this thing?
He kind of pops in and out,
Yeah.
not as often.
I love him. I'm working with him now.
Oh, yeah, he's a good guy.
I never had anything really because I was 100% real estate.
Yeah.
I'm changing. Hey, Mark, how's it
Hey,
going?
Patty, good.
Good.
Good. I just telling Edward before I had to grab that call. I kind of had to rush down here, and I didn't get a chance to really do my usual Thursday scouting of all the blogs and stuff. Which,
Yeah.
usually I'm pretty good at it, but just
Yeah,
it's
you
just a manic day. So I didn't bring a bunch of stuff,
Yeah.
but I can always
You can always
just
do it.
make stuff up as I go.
Yeah,
Oh, yeah.
that's all we do. I mean, yes, every time. And the basic questions. You nice look. I love these shoes. And
I know.
you're Robert Graham and whatever.
Yeah.
Very nice look there. Very fashionable today.
Yeah, having fun with it. Just a little bit nicer than typical. I'll work with it fine. We're so good on time.
All right.
So what did you bring? What are your notes?
Let's see. 25%. Like it's a slow start this year, but we're doing
really?
well. I think it is, but then when I look, I can't stand listening to it. When I like mine is really slow, but I think it's really slow, and it almost feels like things are changing because last weekend, for example, I sold 2 properties. One was like 2.3 in Kent Woodlands. One was 2.8 in Napa. By Monday, they fell out of escrow.
Oh, okay. Well, let's
That's weird
actually
when that
talk
stuff
about that.
happens.
Let's go into it.
Interesting stuff.
Well, I mean, there's my little world. There's what's really going on in Marin, and then there's the Bay Area.
Right.
So when I start looking at the Bay Area is doing okay.
Okay.
And then I have some car statistics year over year,
Okay.
CAR,
Let's do that. Let's talk. Let's go. Because from there we can just kind of expand on it. And
Yeah.
just kind of go off on tangents like we like to do. And
Yeah.
make it some good radio.
Yeah. And what was my question? I forget. Remember? I know it was easy.
How do you help evaluate multiple offers to figure out which one I should accept?
Oh.
And Mark, yours is how do you prevent borrower fraud?
Nice.
And we were to say Pacific Union International.
Yeah.
What, they changed their name?
That is the name, and it's always been the name, but I always say Pacific Union Real Estate because international, like, what do I do?
I know.
Import, export? What am I, George Costanza?
Import, export.
Like, just to say real estate.
Kramer, and you work for Vandalay
I-
Industries.
Vandalay
My
Industries.
name is Aunt Vandalay.
Yeah.
I'm an import, export.
Yeah.
And on the side, I do oil drilling.
I mean, what do you want me to say?
I'd say real estate, Pacific Union Real Estate.
Okay.
Yeah. Because otherwise, like, let's just be specific.
International, really.
It's real tea or real estate?
I'll just say real estate. It could
Okay.
be either one. It's neither, actually.
That's what Pacific's around here.
I know,
Okay.
because you're Pacific, and I'm Pacific. It's like, what are they doing?
Right, cahoots.
I know.
Straight.
Okay,
There's the barter Exchange Pacific.
Yes, yeah. That's right.
That's right.
Pacific Trade Exchange. So, who's going to start off?
Well, let's start off with you talking about just kind of interesting how the Bay Area markets are just kind of all over the place and how Marin is slow. And so we're going to start it out slow. I'll interject immediately. Just like really, I have no idea. Just because I'm hearing. So I know as a lender, certain markets are just hot. So it's all anecdotal. I don't have anything in spreadsheets or anything.
Yeah.
Even Barstow.
And what is happening is, affordability is really improved throughout the states. I have wrote down a couple stats on that. It's better,
All right. You ready? Let's do it. Because I know you spent that 5, right?
5-ish.
Well, welcome. You're listening to The Best of Investing on Talk 910. I'm your host, Edward Brown, and I'm proud to have as my co-host Mark Hahn of Pacific Private Money, one of California's fastest growing mortgage investment firms, and Patti Cohen of Pacific Union Real Estate. Our phone number is 888-912-1190. Now write that number down because you're going to use that number to answer the trivia questions for 3 vacations given away during this show. And the vacations are not sponsored by the radio station, but by Lighthouse Resort and Marina, located about 1 hour northeast of San Francisco. Those vacations are free. Their only request, a $75 cleaning fee to cover the housekeeping expenses. Today's trivia theme is game shows on TV.
Oh, that sounds like fun.
That'll be fun. Last couple
Better
of
than the last week.
Yeah, those were a little hard. Okay, let's see. Our website is bestofinvesting.com. Check us out there. Okay, so Patti, actually, we get some kind of interesting statistics for us here.
Well, you know, the big question all the time is, how's the market? Where's it going? And particularly at the beginning of a year, we want to check in. And right now, it feels like the market has changed.
Yeah.
There are people saying things are going to go down, but all the economic indicators say that it's a healthy market. It's going to be just fine. And I think when some counties are doing really well, and it's good to keep in mind that we are not quite even at the end of February.
And we still have job growth, right?
Job growth.
Okay.
So when you really look at residential real estate, it is about people and their lives. So there's 4 reasons why things, I think, are like a little bit slow right now. One, we had more rain, and people don't want to get their carpets messed up.
Right, yeah.
You know, they're like, they don't look pretty. My house is a mess. I'm not putting it on right now. Then, you know, and then there's all after Super Bowl Sunday. But right after Super Bowl Sunday, we had a triple whammy, which was Valentine's Day, 3-day weekend, and the kickoff in some school districts of winter break.
Oh, ski week, yeah.
Ski week.
So Valentine's Day is not the one that people, hey honey, let's go on Valentine's Day and look for houses?
Right. Because, no. Well, that is a good gift. I'll take that gift any day.
I mean, listen, I took my wife to Costco for free appetizers for our first date, so I'm a big spender.
That's so funny. They are free, and you will be full. Yeah, so I think that there's that. Like, you know, I put a listing on the Super Bowl weekend, which I thought was perfect. You know, look what everybody's doing in life and do the opposite. So the buyers are out, the sellers aren't.
Yeah.
And so I had multiple offers on the property and went right away, $100,000 over asking, because nobody else is playing. But I would have thought that this week, right now, would have been a lot more inventory. But it's just they're getting back from break. I mean, nobody really has to sell. Yeah. So they all look at timing, and and here's my advice to sellers. The best time to sell is really right now or 2 weeks ago. Because everybody...
Can I go back in time?
I know, exactly. Because everybody's doing the same thing, and they're all competing with each other.
Waiting for spring.
Yeah. But at the same time, there still is pent-up demand. There's still job growth. There's still year-over-year appreciation. The affordability index is up. And we're going to have a really good spring because there's so much pent-up demand. It's a dearth.
Now, so the affordability index, is that up because of supposedly maybe higher wages and or job growth combined with lower interest rates?
Well, I think so, because it has to be, because prices are up, and those are the 2 other factors. So jobs are really strong here, and interest rates are continued low.
It's amazing. You're talking about anywhere from 3 3/4, even down as low as I've seen 3.5 for certain special qualifiers, and even less if you do like a 7-year ARM. So mortgage rates right now are just unbelievable. They're like at a 1-year low all over again. And again, nobody saw this coming, right? No one saw the stock market taking just a complete, bath at the beginning of the year. I mean, I think you have to go back a long time. In fact, I think since stock market records have been kept, I think this is like the worst start of the year ever.
Yeah.
It's come back a little bit, but yeah.
So a lot of trepidation.
Scary.
You've got oil prices which have continued to be low, which you would think would be good for the consumer, but in reality, there's always 2 sides to every coin. And the side of the coin, which is those companies and those countries that suffer as a result of low oil prices, are actually causing trepidation and fear in the stock market. Oh, what's China going to do? And so it's just really So it's really interesting that you say, Patti, that for you, and your market is primarily like Marin County, and you're saying, well, it feels like it's starting out slow. And for me as a lender, I'm a private money lender for short-term real estate bridge loans and for fix and flip and for contractors. We're actually on pace for our best quarter ever. And typically for us, and I've been doing this now since 2008, the first quarter has always been our slowest quarter of the year. Our best quarter ever was the second quarter of last year when we originated a little over 20 million in loans. We're on pace to do 25 million in loans in the first quarter of this year. Now, part of that is because we're growing, we're expanding, we're marketing more heavily. It doesn't really mean it's the market is that much better or faster or than a year ago. It's just that what we're experiencing is it feels like growth. And because we're doing all these loans, I'm talking to people in markets like Oakland and Berkeley, and they're telling me it's just still red hot. You put something on the market, it sells in minutes. And
Well,
San
it is red
Francisco
hot.
is still hot. And but I am hearing also that other markets have slowed down, like Novato, for example, which is the bedroom community for Marin County. It's in the northern end of Marin County. There's a lot of homes for sale right now, and they're not flying off the shelf. So you actually can get really good value in certain pockets of the Bay Area if you know where to shop.
Why do you think that is, the difference between, let's say, Berkeley and Novato? Like, why are those cities?
Well, Novato always has been a little bit slow, but I think at the same time, when I say the market is changing, I'm talking about I have a very micro kind of perspective when I look at it week over week, year over year. What did it do last year? The point is, it's still a strong seller's market. Properties are still going at or over asking, many of them.
Yeah.
It's just that there is so little inventory, and that's why buyers are frustrated. So that's still a strong market.
That conversation hasn't changed either. I mean, we've been saying low inventory for what, 3-4 years now?
Yeah. Well, just when we think it couldn't get any lower, it's lower.
It gets lower, right?
It's lower.
Right. Days on market is still fairly low in many markets, and then you've got what the so-called inventory is measured how? It's measured by what number of days or months of inventory that's on the market?
Well, that's the lost the word.
Sorry,
anyway, that's the absorption rate.
That's right,
yeah.
the absorption rate.
Yeah.
Yeah.
So inventory is inventory. Like how many active listings are there right now?
Yeah.
And and then it's always interesting. I mean, the first thing I do when I look at a market is say how many for sale, how many pending, and what's the percentage? Because that's going to tell you if it's a seller's market or a buyer's market. If you have 100 properties and 60 of them are in escrow, wow, that's ridiculously strong. If you've got 15, which we've all lived through times like that, then that's a buyer's market. So it's still a very strong seller's market, and the numbers are down somewhat in some places. Like, for example, the affordability index across the Bay Area is 24%. It's up 3 points over last year, which is a lot. Now in Marin and Napa, it got less affordable year over year, but I mean in Solano County the affordability index is 45%.
Wow.
So it's all relative. The market has not changed dramatically. It's just a slow start this year, from my perspective. But when you look at the whole Bay Area, it's actually up.
All right. Okay. We're going to cut to our first commercial break, and when we come back, Patti, we have an interesting email about evaluating multiple offers and trying to figure out which one to accept. That'll be a very interesting question for you here.
It is.
Before we get to the break, though, tonight at the downtown Walnut Creek Leisure Theater, the Beatles are playing. Well, actually, it's a Beatles tribute band. In fact, Mark and I are planning to take our wives there tonight.
What's that? The Beatles tribute band? Is it?
It's a tribute band. It's not called Beatlemania, but it's a tribute to the Beatles. So it's kind of an offshoot. Where they'll do all kinds of Beatles songs, probably all through the beginning part to the end.
I love it.
Isn't that cool?
Wow.
And if you get your druthers up for Pink Floyd, another tribute band, March 12th, and that's at the Leisure Theater in Walnut Creek. I think it's at the Hoffman Theater, which actually I've been to. It's a very, very nice venue. So check those out. One tonight, Beatles, March 12th, Pink Floyd.
Wow, so fun.
Fun, very fun. Okay, so here's our first trivia question about game shows on TV. Mark, I know Mark will get this one. Which character from the show Cheers was on Jeopardy, where all the questions seemed tailor-made for him up until Final Jeopardy, that is? The first caller with the correct answer wins a free 3-day, 2-night stay at the Lighthouse Resort. Call 888-912-1190. That's 888-912-1190 to answer this question. Which character from the show Cheers was on Jeopardy, where all the questions seemed tailor-made for him up until Final Jeopardy, that is? Don't touch that dial. The best of investing will be right back. Well, and you know that one.
I do.
Yeah, see?
With Norm? Probably not Norm.
Too many times I ask more hard questions.
I have a guess, but I don't really know. I don't know that I know.
And it's not right, so you don't know what you don't know.
does.
It really does.
I just got the Numero magazine again. This is the actual show came in. They're still doing the full page ads of how much people sold last year. Congratulations, 2015, and blah blah. Sold. It's really just such a puff piece for people to like that just promote themselves.
Always.
Yeah, it's like I say I'm on Facebook. I claim it.
Yeah, exactly. Really expensive advertising. Yes.
Yeah.
Okay. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hahn and Patti Cohen. We cut to the first commercial break. We asked this trivia question about game shows on TV. Which character from the show Cheers was on Jeopardy, where all the questions seemed tailor-made for him, up until Final Jeopardy, that is?
Was it Woody?
No.
The guy that the Postals.
Yes,
guy.
Cliff Clavin.
Cliff Clavin,
Cliff
that's
Clavin,
right.
That's right. Okay, now Patti, before we go to your email question here, I want to do a little shout out here to the Purple Orchid. It's a beautiful place, at Wine Country Resort and Spa. The Purple Orchid Wine Country and Spa. It stands out among many hotels in Livermore.
Livermore of all places.
Isn't that great?
Yeah.
They have private fireplaces, jacuzzi tubs, and delicious breakfast during your stay. They also guarantee guests will feel relaxed and rejuvenated during their visit when they take advantage of the extensive spa. You got to check them out. Yeah, I'm in www.purpleorchid.com or call 925-606-8855. All right, Patti, we got an email here. It says, how do you help evaluate multiple offers to figure out which one I should accept?
So help evaluate it from the seller's standpoint, right?
I would think that's what they're probably.
Yeah. Well, I deal mostly with sellers, and I specialize in multiple offers. So it's very strategic, and it's sometimes not really surprising. It's always a fun, great surprise, but it's very strategic. So number one is your pricing to generate multiple offers, and I can track on MLS and show sellers that if you get one offer, here's what you're likely to get, list price to sales price. If you get two, here's what you're going to get. You get 3, 4, 5, 6, up to 15. How much over it's going to go, and it's very, yeah. I mean,
what about the actual quality of the offers?
Yeah. So, so here's the game. Obviously, it's price. It's always price. I mean, but then you want to really look at a lot of other things, like, generally it's price, but all things being equal. But you also want to know, like, what's the profile of the buyer? If things don't add up,
Finance contingency.
Yeah. What's the close of escrow? So, and before a buyer's agent's going to write the offer, they're going to ask me, a listing agent, what do the sellers need? Well, they don't know where they're going, but a quick close, like a 15-day close and a 60-day rent back would be divine.
Okay.
So those are the things, like, the buyer's agent is going to know up front how to do this.
Well, also, if there's maybe some issues with the house, maybe something that's purchased as is, no contingency.
Well, that's a little scary, and what I always have sellers do is get inspections and reports up front. So we give them to the buyer and say, make your offer based on this, because the California real estate contract is as is.
Yeah.
So, but there are surprises, and buyers often get their own inspections anyway. Not always.
Yeah.
And it always just depends on how many offers we're talking about. If there's 2, I've seen them both be under asking. If there's 15, I've seen them go 25%, 30% over asking. So number one is price, but you also want to know, is it cash or is it a loan? If it's a loan, who's the lender? If it's like some online lender in Southern California, it's like you're going to be really careful. You want to get somebody that's local, that has their reputation on the line, just like the real estate agents do. You want to look at the agent and have you had a track record with them, and how's that going to go? How solid are these people? How much do they want it? People are baking cookies and giving pictures of their kids and just to get it. But other than price, there are a lot of ways you can structure an offer to have it be accepted.
So, this may be a silly question, but is an all cash offer, always better than a contingency offer, even if the contingency offer might be around the same price?
It really depends, but people, if it's the same price, people are going to go for the all cash.
Yeah.
Because the all cash is sometimes going to be a 10-day close. don't waive inspections. They've already seen the reports. Seller can rent back free for as long as they want. I mean, that's a sweet deal.
Sometimes you see offers from people, and it comes with the story. The story, and usually when there's a story, you know it's going to be financed or some kind of contingency on the offer. And they kind of play with the heartstrings and try to get you as the seller of the property to go, yeah, you could sell it to this, all cash investor, or you could sell it to this young family who's been looking and they've lost out in the last 5 deals and blah, blah, blah.
Potentially you could see all cash offer with the same story just because they.
Well, you could, absolutely.
Yeah.
But I do know that this, again, there's the human element of it, and oftentimes that can have a strong impact. And I remember in the last sale that I made of my home, it was really difficult for me to make the decision between the cash offer and the same price offer that had financing contingencies, because there was the story and there was the couple, and it was like, do I want to do something because it feels good, it feels right, or do I just want to nameless, faceless contract get out of Dodge?
Yeah, and then you have to think too, like, who's gonna, at the end of the day, is this a buyer that's going to sue you? What's their level of, But
right.
I mean, I have seen sellers who accepted a much lower offer because there was the story versus the all cash. And it's usually someone that's been in the house like 50 years and they raise their kids and they want to see kids in the neighborhood. It doesn't happen often, but
it does happen.
Yeah, but I can also see
crazy.
the situation of where you have a buyer who you're scared of, who you get the feeling, this person's gonna sue me. It doesn't matter what it is.
Yeah.
Just that they're offering over, but you can just sense.
Yeah.
This is a lawsuit waiting to happen.
So Patty, getting back to the multiple offers, I have a slightly different question about multiple offers. Is there a pricing strategy in order to attract multiple offers in the market that we're in right now?
Oh yeah. I mean, and each market's different. I mean, for example, San Francisco will price something 25% under, so that it goes, 40% over. Well, under meaning like under what is
like
your
$1 million
market value?
property listed for $750, so they can sell
it goes for
1.2.
1.5. And sometimes
1.5.
I've seen them go 1.5. I've seen them go 1.5.
I've heard that story.
Yeah.
Yes.
And the closer you are to the city, the more you get the kind of city buyers. Like, so example, a Mill Valley property is going to always get more because those buyers are city buyers that have been conditioned, whether they just sold their own house or they've been beat out by properties that they tried to buy in the city, but they've been conditioned like, you got to play the game. And really it takes, and from the buyer's standpoint, they've been beat up and bloody, and sometimes they're like, I don't care what it takes. And it's very emotional. It shouldn't be emotional. When I counsel buyers, I say, put it at a price where you won't be upset if you get it, and you won't be upset if you don't get it.
That's very wise.
It's very interesting.
And I guess you can't put in an offer, like if I'm a potential buyer, I can't put in an offer that says, whatever the highest price you get, I'll beat it by 10%.
Sometimes people do that, and it's really not an offer. I mean, agents do that, and buyers will do that.
It's not illegal to do that?
It's kind of like nothing's been accepted yet, so it's like, please come back to me, is what they're saying. And in San Francisco, for example, they will say, give us some offers, and then they'll come back and they'll give like the top 3, give us your highest and best. Now in Marin, we pretty much have the tradition of come with your best shot right now, because we're not coming back to anybody.
Yeah.
So it's sort of like, what's the culture in the community?
Wow.
So it's a little bit different market by market. So I guess that's really important to know, and you definitely want to work with an agent who's familiar with the marketplace, because probably, if you're in San Francisco, you might want to use someone who's familiar with selling in San Francisco. If you're in Marin, you want to probably use someone who's familiar with selling in Marin for that very reason, because of that strategy. Some list below market with the idea they're going to get multiple offers above asking, and so the community knows that already, but maybe in other markets that's not a good idea. It won't result in the price that you want.
That's why it's so important to find a good agent. Like,
you gotta go
who happens to be number one.
Yeah.
In fact, do you ever have a situation where a real estate agent will hire you? Do you ever have
I do co-listing all the time. I work a lot of expired listings, so for whatever reason the house didn't sell. And if it's an agent selling their own property, especially commercial agents, but sometimes residential, I'll just say, hey, how about this? We co-list it. You don't have to do one thing, and I'll do everything, and we split that listing side 50-50. I do
Wow.
it a lot.
Yeah, see then they get away from the FISBO.
Yeah.
Yeah, that's probably smart. All right, Patty, how do people get a hold of you if they have excellent questions about this?
Oh, I'd love to talk to anybody. It's Patti Cohn, C-O-H-N, with Pacific Union Real Estate, 415-722-4842.
Also go to the Best of Investing website and see Patty up there. All right, we're going to cut to our second commercial break, which is game shows on TV. And when we come back, we're going to ask Mark a question about borrower fraud. That'll be very interesting to hear what you have to say about that. And let's see. So a quick little shout out here to the Lesher Theater in Walnut Creek. George and Sonia Vocason Theater is having something called Pageant through March 6th, where the audience gets to be the judge of the pageant. Kind of fun. Check them out. Okay, so here is our second trivia question about game shows on TV. What game show in the early years was more about the prizes? The ending of the show used to feature the winning contestant looking at various prizes and, quote, shopping with their winnings. What is the name of this show? The first caller with the correct answer wins a free 3-day 2-night stay at the Lighthouse Resort. Call 888-912-1190. That's 888-912-1190 to answer that question. Give us your email, speak slowly, and spell it out for us. Don't touch that dial. The Best of Investing. We'll be right back.
Good job.
Yeah.
Saves this file. Do you have a deal of the week for us? Mr.
I do, but it's more of a story about a deal we
That's fine.
didn't do,
Okay,
and
that's
why
fine.
we didn't do it.
Okay, good. It's just all we care about is good rate.
Yes.
That's right. No, it's a good story. It's an
Okay.
interesting story.
So we'll answer the question first, and then we'll go to the story. Actually, Mark, would you do me a favor and hit the big fan so that we don't.
Yeah, I usually move it before I sit
Yeah.
down, but for some reason the collar of the shirt, I'm not feeling it on the back of my neck as much as I usually do. That way, all right?
Yeah. Good. I put some tape on this and it didn't hold. That's what fell down. I'm glad it didn't.
Didn't know
Whack
idea.
anything.
Didn't know it was falling. You know, they've got those special hangers
Yeah,
that
yeah.
tape to the wall. That is better than regular tape. We do.
Yeah.
we
I
do
mean, it's
those
just
in our house.
double-sided, but
Yeah.
it's strong enough.
Yeah, it's not made for hanging pictures.
Ready?
Yep.
Yep.
Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with Mark Hahn and Patti Cohn. Here is our second trivia question. What game show in the early years was more about the prizes? The ending of the show used to feature the winning contestant looking at various prizes and, quote, shopping with their winnings. What's the name of the show?
What do you think it is, Patty?
Well, I remember seeing that when I was younger, but I don't have any idea.
Let's make a deal.
No. It's still on. The show is still on, but
Still
they
on.
changed it. It's now just the money. You don't do the prizes. Wheel of Fortune.
Oh, we are.
Do you remember that?
Yeah.
I remember that. Wheel of
Oh.
Fortune. You win the money, and then you go out and you shop with the money. And it just took too long, and I guess they figured, just give them cash.
Yeah.
Okay, so Mark, email question for you. How do you prevent borrower fraud?
Well, you know, that's an interesting question because you're still reading in the paper now about, lender fraud and banks that are being fined, heavy, sums of money for, supposedly, doing wrongdoing in bad loans that were originated all the way back in, 2005, 6, 7, before the real estate meltdown. Borrower fraud is a little bit different, and so at Pacific Private Money, we originate loans much like a bank, except we're faster, and we say yes typically when the bank says no. We don't always say yes, and we'll talk about an example of that maybe in a little bit, but borrower fraud is really about due diligence. So pretty much everybody pulls credit when you apply for a loan. Even hard money lenders, many times, at Pacific, we pull credit 100% on every borrower, no matter what. Even if it's just a ridiculously low LTV request, $100,000 on $1 million property, something like that.
A lot of
First
times
position.
it talks about, it shows you the character of the person.
Right.
Mm.
Yeah. But credit reports don't show a lot of information. So there's this. There are a lot of ways you can pull background reports on people, and one of the industry standard companies is like LexisNexis, which is what we use. So we pull on every borrower not only a credit report but a background check, and that will show criminal activity. Depending on how many reports we pull within that database, and each of them, cost different amounts to us, which is part of the, when we charge fees, included in that is kind of reimbursement for our out-of-pocket expenses that we incur every time we consider making a loan. But we can pull all kinds of background information. We can find out what real estate they own, what licenses they have. There's a lot of, we can even get cell phone numbers. There's a lot. We don't go to that extent, but there's a lot of interesting information that you can pull from background checks, depending on the resource that you're using. So that's really what we do. And then, I'll tell you, a good old-fashioned Google search is amazing. And again, sometimes and we're all guilty of this. In fact, I know in our office, we were embarrassed a couple of times to where now we never forget to do a Google search on the applicant, because we had one time the credit report was clean and the background check was clean and everything was good about the property, and then we put it out to one of our investors and they called me back and go, "Did you Google this guy?" And so it's amazing. But well, I don't remember the details,
okay.
but you really need to, and plus there's ways you can use Google that are a little bit deeper than just simply typing in the name. So you can kind of follow a little bit of kind of go down the rabbit hole, so to speak. But you can actually, in a few minutes, and if you're fast with it, the information's instantaneous. So we work really hard. We've learned the hard way on some of these. Early again in the career of our company, Pacific Private Money, we were almost victims of borrower fraud, where it was extremely clever, and it was the title company, the agent representing the borrower, the appraisal company. Everything was fake, but it was done really, really well. They all had different phone numbers, and people were responding, and it was all done over email and phone calls. And we're in San Francisco, and this borrower the applicant was a Southern California application. And so, make a long story short, we had a lender client down there, and we offered the opportunity to them, and we asked them, could they go ahead and do the due diligence. So they actually went up and knocked on the door of the party, and the person who answered the phone answered the door, had no idea what they were talking about.
Wow.
So it was complete fraud. The other kind of giveaway that gave us a little bit of apprehension was that the music on hold, all the phone numbers that we were dialing, was the same. Yeah, so that was
very
interesting.
true.
So anyway, so that's when we called and said, "Hey, would you mind go knocking on this door? It's just something that just feels a little hinky about this deal."
So even the title company, it was like the title company.
It was a real title company, but the number was wrong, and it was ringing to someone who's playing the agent. So, but it looked like we had used this title company before and had the right address and everything, but the phone number on that prelim, this was extremely clever. So anyway, borrower fraud you can be a victim of it. And so now we don't do refinancing in Southern California because without boots on the ground, just because it's one thing if it's a purchase. If it's a purchase, there's a lot more third-party people involved that you can kind of verify that this is a real transaction that's happening. But refinancing of properties, that's where a lot of lender fraud, borrower fraud is happening.
Also, probably one of the reasons why, if you have the opportunity, you'll choose your own title company, ones where you've had experience with.
Well, and some do. Now, of course, that hurts your business a little bit if you insist on doing that, because oftentimes deals come to you and the escrow is already open, and speed is of the issue. So, if we were to say, well, we're sorry, you have to close escrow on that, and, because there's relationships, there's all kinds of stuff.
Yeah, but most of the title companies you already have relationships with, so unless there's something
That's
really
true.
esoteric one.
Absolutely. So,
and it's back to local is good, because we did a transaction with Mark's company. The escrow was already open, but everybody knows who the escrow officer
That's
is. They've been around
exactly
for 20 years.
Right.
Local is good.
Local's good. Yeah.
And
So,
then,
so fortunately, we've not been victims of borrower fraud, but we almost were, and as a result, we certainly, sometimes the hard lesson is the best lesson, and that was very scary. It was incredibly scary to know that we could have fallen victim to that. So we work very, very hard to make sure that it's a legitimate transaction, there's legitimate parties, it's at least, if not arm's length, meaning arm's length would be, it's, listed on the market, on the multiple listing service. Sometimes deals come to us and, there's an option between friends, or it's a probate where, siblings are buying each other out, in which case there's usually an attorney involved so we can verify that, hey, there's nothing hinky going on here, this is actually a real deal.
Assuming the attorney is legit.
Really. And when, and we all know, there are no such thing as dishonest attorneys. Anyway, so it's a good question, and we work pretty hard to make sure that we never put our investor capital at risk.
And tell us about a deal of the week.
So actually this week, this is a deal, what I'm going to tell you about is one that we didn't do. So, and the reason why we didn't do it, it's actually really unfortunate. So, Dodd-Frank was a huge bill that, among other things, really clamped down on lenders. Most people who know about or have heard of the Dodd-Frank financial reforms will think, oh yeah, those are the ones that basically outlawed predatory lending practices by banks. Well, even private lending lenders have been kind of swept up in the new regulations, and so many of the loans we used to do without even thinking about it, now some of them are much harder to do, or many of them are much harder to do, and some of them now are basically illegal to do. And one of them was unfortunate. So I got a call from a broker that sends me a lot of deals, and it's a woman whose husband died recently, and she's living in a home, and she's got a first on the property, but she has a lot of equity. And I don't have the numbers off the top of my head for this, but the property's in Danville, and it's worth about $2.5 million according to an appraisal that was part of the thing. And there's $1 million loan. And she's just looking for a couple $100,000 to remodel and sell the home, right? Nothing unusual about that. We would make those loans all day long 5 years ago. But now, thanks to Dodd-Frank, that says thou shalt not make a predatory loan, and thou shalt not make a loan to someone who can't prove their ability to afford the monthly payments.
Absolutely.
We had to turn that loan down because, well, first of all, she wanted a short-term loan. You can't do a short-term loan that's for consumer purposes on owner-occupied property. It has to be a fully amortized loan. So we have to do like a 20-year fully amortized, or 25 or 30, but there couldn't be a balloon on it, number one. But number two, and more importantly, and this is why we had to turn it down, she didn't have enough verifiable income to show that she could afford the payments on this $200,000 second that she wanted, even though she said, what would really be great is if you could just, I would like to borrow an amount that would maybe prepay or reserve 3 months of interest or 6 months of interest, so that I don't even have to make a payment. I could use the money, fix up the house, put it on the market. I'll even introduce you to my listing agent. I mean, all of the things. So, but what we did tell her, and actually this might turn out to be a good story at the end, is we said, if you move out of the property and you make another property your primary residence, and now it's a secondary property that you intend to sell, now that, and we would run this by our attorneys to make sure we're not running afoul of any regulations, but now technically, it's no longer your primary residence. Your primary residence is where you're living elsewhere, and now this is a property for investment purposes that you are looking to borrow money to improve and sell. And so there is a way out, and it's really unfortunate that we have to go through these really silly, ways of kind of doing a loan that should be perfectly logical, but thanks to the ironclad regulations now, many of those in our industry, they just simply stopped making any loans that are owner-occupied.
And I guess you can't really move into a hotel room and say, this is my primary residence.
It's got to be, and some lenders will say, I want to see a lease, I want to see utility bill in your name. I mean, they go off so we don't go quite that far. We've, again, sometimes you just have to decide as a business person, you can do enough due diligence to determine that, all of the right reasons exist, and that the chances of this turning out to be a situation where the borrower turns around and sues you for making a predatory loan are so slim as to be infinitesimal. But it is a shame that we as loan originators and lenders have to be worried about making a loan that the borrower can turn around and sue us immediately for making, even when they begged for the money.
Yeah.
So
No, I've heard so many situations like that, and in a purchase where maybe it's 10% loan to value, or an elderly person cannot get the loan, and they need just a little bit more to scrape by. They're buying something for $1.2 million. They're putting $1 million down. Whatever. They cannot get a loan.
Which is kind of weird because they can do reverse mortgages potentially, and that's still a loan.
Well, I know that it's true.
It's kind of strange. Okay, we're going to cut. Mark, how do people get a hold of you?
Oh, sure. PacificPrivateMoney.com, or give us a call 415-883-2150 and leave a message.
By the way, how's your fund doing? What kind of rate is it generating?
So the Pacific Money Fund is paying. It's a mortgage pool fund that is paying a little over 8%. It ended the year in 2015 at 8.2%. Distributed and 8.5 compounded for those growth investors. We're up to 15 million. We've got 85 investors in the fund. We're shooting for 50, so there's still 50 million. There's still a lot of opportunity. That's a fund size that we think is kind of optimal for the volume that we're doing at Pacific Private Money, and it's pretty interesting. Well, the weighted average loan to value of all the loans in the fund right now is 55%.
Wow,
very
well secured.
Really impressive.
For more information, again, go to our website PacificPrivateMoney.com or give us a call, leave a message, and we'll shoot you some information on how to learn more.
Great. We're going to cut to our third commercial break. Before we do, want to make a quick mention to our friends in the barter exchange, Pacific Trade Exchange. Check
Love
them
all
out.
those Pacifics.
I know.
Pacific Union, Pacific Private
Must be
Money,
called
Pacific
Pacific
Trade
on this
Exchange.
show.
That's it. They're just going to call this show the Pacific Show.
That's
Yeah,
right.
so check them out, Pacific Trade Exchange. Find out what they're all about. Okay, what game show did Richard Dawson host wherein he usually kissed all of the women on the lips, that little rascal? And this is not Hogan's Heroes either. Okay, the first caller with the correct answer was a free 3-day, 2-night stay at the Lighthouse Resort. 888-912-1198. Answer that question. Stay with us. Best of Investing. I'll be right back. Do you want to say anything about being approved by the U trend? Or it's too soon for that?
No, I could talk about that. I can just, again, briefly. Is there? We probably ran a
I'm gonna see
little
how
long
much-
that segment,
we did.
which
I'm gonna
was
see
good.
how much time
So many
we have.
minutes.
Yeah.
Anything else you got, Patty? You want to cover?
Not really. I mean, just talking about
What do you got?
the market. I mean, not really anything. I mean,
Oh, okay.
this is just a long, straight talk about what's going on in the market, and it's kind of complicated. But in other words,
Complicated
where do you
makes good
start?
radio, right?
Yeah.
Where do you start?
Volatility is probably, it's like 3 pages of where do we stand?
Oh, where they're
As we
blaming?
continue,
Is she
so
blaming?
California double-digit appreciation. I mean, it's just what's going on in the market.
I always look for nuggets in there. Like, did they say anything about why? Like, can you say in a couple of sentences why this particular writer thinks the equities markets are just going like this?
Yeah.
Because this week has just been another crazy week. Up 200, down 200. Up 200, down 200. Just
Yeah.
nuts. It has nowhere. It has no direction. And
Well, I mean, basically, she's analyzed what's happening. So the market is still on track for appreciation. And then the
In real
reason
estate.
stock market volatility is primarily driven by an oversupply in oil and global markets. China is doing just fine, still growing at 6%. U.S. economic fundamental is excellent job growth. Buyers are happy, so consumer confidence is high. Higher activity in lower price ranges helped by low mortgage and
maybe
job
we
growth.
just in general just kind of talk about just
Yeah.
kind of what's interesting about the market right now.
Yeah.
That in general, most signs look good, but if you're a stock market player right now, you're just you're crying in your beer.
Yeah.
Okay, we got 9.5 minutes to go.
Okay.
Good. That's a lot, actually.
Here we go. Well, welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Hunt and Patti Cohen. Third commercial trivia question: what show did Richard Dawson host wherein he usually kissed all the women on the lips?
I'm like the worst for this contest because I didn't watch any of those shows, but I totally know which one. I can see it
I
in
can
my
see him
mind's
doing
eye,
it.
but yeah.
I can see him. Come on down. This is your life.
No.
Price is Right?
Not Price is Right. No, Family Feud.
Family
That's right.
Feud.
We're terrible.
Totally.
Okay. So, Mark, off break, we were talking about something about Schwab and you being qualified on something?
Well, it wasn't Schwab, but it was Fidelity. So we were talking at the very end of the break was Pacific Money Fund, and the Pacific Money Fund is a mortgage pool fund that is called in many circles an alternative investment strategy. Most of your financial planners and your financial brokers will not, they're not promoting these, they're not recommending these, and for good reason from their point of view. They really can't earn money recommending those products to you like they can stocks and bonds and other traditional types of investments. Alternative investments oftentimes are classified as being, many of them are illiquid, depending on the type, like investing in real estate, for example. So the Pacific Money Fund is often described as being similar to a mutual fund of mortgage-backed notes. So we have a fund, it's $15 million. We make short-term real estate loans with that money. We don't do anything else with it. We don't buy real estate. We don't make personal loans or unsecured loans. The assets, 100% of the assets of the fund are real estate secured notes, mostly lent out on properties here in the Bay Area, or cash. Those are the only two assets, cash or real estate secured notes.
So the only reason you have cash is because you're waiting to deploy that in real estate loans.
That's exactly right. And we're paying the members of who open up accounts and deposit money into the fund. They're currently earning a little over 8%, and I always have to say this, past performance is no promise of future results, but we have every reason to believe that we're going to continue to pay out in the low to mid 8s for as far as I can see ahead, which is the next several years, based on what I believe the Bay Area real estate market is going to do, and the demand for short-term capital, which never seems to go down.
Yeah, you do short-term loans, so you're not having to project out 20 years.
Now, what we recently were approved by a major brokerage house, Fidelity, for their alternative investment platform. And why that might be important to some listeners is that many of you have accounts with major brokerage houses, say, TD Ameritrade or Schwab or Merrill or LPL. And actually, we were just introduced to an opportunity through the organization that created our fund, a company called Fairway America out of Portland, Oregon. They manage dozens of mortgage pool funds like the Pacific Money Fund. And we're discussing with them an opportunity that they introduced to us. We had a conference call with them this past week where we have the opportunity to actually be listed in the program where Schwab account holders and other companies, there's a list of companies. If you have an account with them and you want to take advantage of their alternative investment program, maybe you want to take some of your financial assets and redeploy them from maybe stocks and bonds. Not all of them. We'd never suggest anybody sell all your stocks and invest in a real estate mortgage pool fund. But certainly, if there's probably a percentage that I think everyone should be considering investing in alternative asset classes like a real estate secured mortgage pool fund, because let's face it, how many investments right now are paying 8%? Not a lot.
Not too many.
Yeah, it's been pretty consistent. We haven't gone below 8% on an annualized distribution in any month in the last, it's been 32 months now that we've had the fund ongoing. So pretty reliable, and there are a lot of mortgage pool funds available throughout the United States, but we're right here in the Bay Area. We specialize in Bay Area lending. Most of our investors are Bay Area residences, and so we loan where we know, and we think it's a great opportunity. So again, we're really happy about that. And again, for more information, if you want to know about how you might be able to take some of your IRA or other custodial savings in whatever company you work with, to find out whether or not we might be able to work with you, just give us a call at Pacific Private Money at 415-883-2150.
Very good. Patti, you wanted to share with us a little bit of news.
Well, yeah, it's again back to the macro Bay Area, what's going on. Should I sell my house now? Should I wait? I sometimes still hear people saying, I'm going to wait a few years because prices have gone up, are still going up. Well,
still going up, yeah.
We've had
we think.
Wild ride. Yeah, we've had a wild ride since mid-2012. and it's been an exhilarating, fun ride, but the rate of appreciation is definitely slowing and has slowed, and that's nice and healthy. Then the other side of it, so don't look for, 20, 25% gains. It's over. And as it well should be.
And that's good news. Yeah.
That is good news. And at the same time, is there, what are these jitters about? Is this another bubble or is it not? And, it's not, and who knows really, but it's not. I mean, China is doing fine. China is still growing at over 6%. The U.S. fundamentals are strong with exceptional growth market. The stock market volatility is primarily driven by an oversupply of oil in the global markets. So
isn't that amazing how something that you would think would be good news for more people than not, really, it's funny how the stock market just, if it's bad for certain segments of the business or bad for certain countries' balance sheets,
yeah.
Now the stock market, which is supposed to represent, the net wealth of Americans mostly, is taking a hit because it just doesn't, I think about it, it gives me a headache trying to figure out the logic behind it.
It's difficult too. I mean, because sometimes it's psychological, like bad news, and
It's
everybody
always
just.
psychological.
It's always psychological.
I mean, the whole stock market pricing is psychological,
It's all psychological.
which is why it's crazy. I mean, although, hey, and listeners to this show know that Edward and I are not fans of the stock market. In fact,
I'm not either.
I have no exposure to the stock market right now. So, but most of my investors do, and so I don't wish the stock market to go crazy or go down just so I get more investors in my fund, because my fund investors, they're not putting all their assets in my fund. So again, I'm just kind of flabbergasted by how penny sometimes the stock market reacts to what should be considered by many to be good news.
Yeah, and sometimes volatility in the stock market is good for real estate, and sometimes it's not.
That's true.
For over a sustained period of time, people say, "I'm getting out of here. Where else am I going to put my money? Not art." So they put it in real estate. I mean, we had a transaction this week, came on the market in Triberon for 13.5, and I thought, personally, I thought it was a little high. Pacific Union listing, so it was a wonderful listing. I thought I'll take my time and go in and see that. It has already closed.
Wow.
It was on the market last week.
It sold before you got there.
It was all cash and 13 million, like not pending, closed.
Mark, did you buy without telling me?
I know. 13 million all cash. So that tells me that's probably some foreign money, and they needed to park it somewhere. 13 million. Go put it in a bank, buy this piece of real estate in Tiburon.
Well, and you're right that the stock market volatility can be bad for real estate when buyers suddenly pull out of a transaction because maybe they didn't sell their stock yet. They were going to liquidate their stock, and now all of a sudden it's gone down so much, especially if they have individual stocks, that they have to back out.
Absolutely, we get that too.
Great. So, Patti Cohn, give out your information one more time.
It's Patti Cohn at 415-722-4842 or Patti, PATTI.COHN at packunion.com.
And Mark Hunt?
PacificPrivateMoney.com or 415-883-2150.
Great. Here's our thoughts for the day. When a man wants to murder a tiger, it's called sport. When the tiger wants to murder him, it's called ferocity.
Let's go lunch.
That was George Bernard Shaw. Yeah, lunch. And journalist Brian Williams said, "You're only as good as the coach thinks you are." That's true. Tune in next week to The Best of Investing. We're going to be giving away more free vacations for answering trivia questions. Thanks for listening. On behalf of Margene, I'm Edward Brown, wishing you the best of investing. So long.
Good job.
Very good, very
Hey.
good.
Nice.
I love how you do that so seamlessly.
Thank you.
Very chatty, very
It's pretty chatty, yes.